Welcome to the Pro Farmer Podcast, your source for what's impacting prices today and your guide to what will impact markets in the weeks ahead. More substance, less fuss. The Pro Farmer Podcast starts now.
Well, welcome to the Pro Farmer Podcast. It is July 21st, 2025. I'm your host, Davis Michelson. Hillary Mason joins me here. Hillary, I want to talk about last week's closes because it almost felt slightly encouraging here. I've got my notes here color-coded. I've got the wheat, both the spring wheat and the winter wheat contracts finishing in the green, in the positive side on Friday's close. Corn, here again, September, I've got Dees, I've got March, all higher by the end of the week last week. August beans, Sept beans, even the Nove, all higher. We get to the cotton a little lower. The cattle were the stinker. We'll get there. We had some pressure on the cattle by the end of the week there, and hogs had a pretty good close on Friday as well. Hillary, you got to talk to us about this because we've been waiting for the train to turn, the ship to turn here in these markets, wondering what the catalyst is going to look like. Are you ready to call a bottom in corn and soybeans, Hillary Mason?
Ooh, I don't know if I I don't know if I have the intestinal fortitude to do that.
Fair enough. Well, what are you seeing here?
I think the markets are getting a little worked up. I mean, so obviously we saw some short covering last week. And we're weather has been pretty favorable. We've had some pretty consistent rain, so the crops just has just gone along at a pretty favorable pace from a condition standpoint. However, it's going to get hot into the end of the month, and there have been some pollination issues that have crept up or have come to light in the past week. So I think the market's a little unsure about what the actual conditions are like out there, just based on what some of these pollination issues are looking like. We don't really know much about it yet, but from a pretty broad area, it seems like so far. So
sure. Let's dial in on wheat just a little bit because the winter wheat contracts we saw a little bit of short covering in the winter wheats there. We've been watching the shorts in the corn market and in the soybean market to a lesser degree. We'd like to shake them loose, get them back over onto the long side of the markets here. Is it just kind of harvest wrapping up for the winter wheat crop here that's got them moving out of the short side?
Yeah, no, I think that's part of it, but also too, the trade deal with Indonesia last week. I think that was pretty helpful. Also on Sunday, Bangladesh signed a trade deal to import 700,000 metric tons of US wheat annually for the next 5 years to try to evade or elude tariffs, in August. So I think there's just maybe some optimism, maybe some hope from a trade front there. And also too, you nailed it. Harvest is kind of winding down. So.
Mm-hmm. Well, let's look over to corn. As I mentioned on Friday afternoon, we had corn closing higher. September was down into the threes for a period there. We closed on Friday afternoon at 408.5 on the September corn contract. How significant was hanging a 3 handle on that contract as far as the trade goes?
Pretty significant, especially from an ending stock standpoint. I mean, so fundamentally, we have to have a pretty decent crop. So yeah, very important. And I think just traders are taking note of everything that's happening. They're kind of maybe looking at fundamentals a little closer than they have been up to date. And so pretty noteworthy given the landscape, fundamental landscape. But yeah, no, important nonetheless. So.
Well, let's stay with the gainers here because we had lean hog futures gapping higher, falling to fill the gap on Friday, and then rallied back to basically end up where it started. I'm calling it a win at least for the August and the October hogs, although the October was up all of 2.5 cents by the end of trade on Friday. There are good things ahead for the hogs.
Yeah, the cash index just seems to want to, it's really it turned decidedly higher late week. So, I mean, I feel like, hogs are going to continue hanging in there for sure. So yeah.
Yeah. Well, that brings us to cattle. It's been pretty easy to talk about cattle because they've just gone up, except for Friday. We've got some red on the screen there. The August contract, 12 and a half cents lower, but still at 223.55. The October contract was down 50 cents, still 219.82 and a half. And even feeders were down a buck, still 324 smackers even there. These are pretty elevated prices, Hillary, and I feel like anything that we can get to the upside from this point is a gift. How do you view that?
I agree. I agree wholeheartedly. Packer margins turn negative again, so they're not as willing to pay up for cash cattle. So I mean that could have a bearing, over the next few weeks. If wholesale values stay lower than they have been, if you will. So.
Mm-hmm. All right, very good. Well, let's look forward to the rest of this week. I think we've got one of these domes of doom lined up for us. Some extreme heat headed at least for my own area, and I can't look outside that bubble. Is it just me, Hillary? How widespread do we expect for this heat to be in the coming, week and a half, I think?
Pretty much the entire Corn Belt's going to be pretty
gosh.
hot. Pretty hot. We'll definitely keep an eye on the weather. Also too, I didn't mention it earlier, but these overnight lows, and up 70 and higher. Good. That's been pretty rough, and it may have a bearing on pollination. But obviously, crop progress is going to be a big deal this afternoon. So we'll wait and see what the USDA has to say about conditions.
Do you reckon we might see a market response to the upside from traders based on this heat? Are they aware of what's going on here and how the crop is imperiled? You mentioned those nighttime temperatures, and I feel like that's such an important thing, but something that gets lost a lot of times. People don't think about that. Like, we need to rest and sleep. I like it like a meat locker in my bedroom. I can't sleep if it's too hot. I lay there and sweat. Corn's kind of the same way. They like to have a nice cool down for the evening. Is this heat enough to freak out the markets? Maybe just a little?
I mean, they should, if they're not taking note, which I think last week's price action was, them maybe realizing, hey, we better, keep a close eye on this, or closer eye on this. So I think maybe the short covering might have been inspired by them taking note, but it's gonna become more important, especially if these temps really get as hot as what they're forecasting through the end of the month. So
yeah, absolutely. So as far as the rest of the week goes, I don't have any huge reports or anything on my radar at this point. What is there something that we need to be looking for coming up this week, or maybe we can just have like a normal week of trade? I don't know.
Yeah, no, it is a little quieter than normal, although Fed Chair Jerome Powell is going to speak tomorrow morning. So I got to think that, the marketplace is going to be pretty tuned in for that, just based on all the fireworks that have gone on in recent weeks. That might be a big one. We also have cattle and cattle on feed reports on Friday, cold storage also. I think, we should definitely keep an eye on generally the dollar, equities, and treasuries, especially after Jerome Powell speaks, and if there's any reaction from the Trump administration after that speech. So,
well, I know you've got a busy week ahead. I've taken up enough of your time already this morning. Hillary Mason, thanks so much for your insights. We'll be right back with Lane Acree from Pro Farmer. We're going to talk about some yield models and some of those pollination problems that Hillary alluded to earlier. Stick around.
Hey everyone, Davis Michelson here, and if you're one of the listeners without access to Pro Farmer's daily market reports and policy insights, this message is for you. Right now, you can start a free trial to Pro Farmer, unlocking the same profit-boosting information that farmers have trusted for over 50 years. Sign up online at tryprofarmer.com. No credit card needed. Visit tryprofarmer.com to sign up and get more details and updates on the topics we're discussing today, plus much, much more.
Farm Journal is going to hold the first ever Yield Academy for 2025. It's going to happen August 21st in Rochester, Minnesota. Listen to this group. Real advice from folks who've walked out in the fields. Ken Ferry, David Hula, Randy Dowdy, and we will get some market outlook from Dan Bossi at Ag Resource as well. Get the latest on what's working in agronomy, equipment, and marketing today. And that is the last day of Crop Tour 2025. So stick around for the final meeting that night in Rochester. Just Google Farm Journal Yield Academy, and that will take you to the homepage for the event.
Welcome back to the Pro Farmer Podcast. Davis Michelson here with you on July 21st already, 2025. Lane Akery from Pro Farmer joins me now. Lane, we've been talking about yield projections, trend line. There have been all kinds of numbers. There have been some big numbers out. I know that folks are trying to get their hands around yield projections here. Some models, one recently came out that kind of was an eye popper for me. I don't want to spoil it. So bring us in, talk to us about the yield conversation that's going on right now, some of the yield modeling that you're observing.
Yeah, so just got back from maternity leave, and over the break, a lot of stir was drummed up by a yield projection coming out of Arlen, out of StoneX, and it was all over X. It's very popular, drummed up a lot of controversy. Just he put out a 186.9, and people are wondering, how did he get there? I mean, it's an unbelievable estimate, and I was able to look at some of the analysis that he's done and kind of go backwards into how we got that number. So Pro Farmer, we've been putting out our crop condition index for a long time, and it's very popular, and it makes a lot of sense how we do it. So people have kind of copied it, and StoneX is one of those people that have copied it, and it kind of takes the national crop condition index that we get from USDA and makes it more applicable on a state level. Mm-hmm. So he's using that crop condition index and basically looking at what it was a year ago, and also using some trend analysis and just trend line assumptions, so trend yield assumptions, and looking at how conditions are versus where they were a year ago and how trend is. And with crop conditions as good as they are, the weather that we've had, conditions are way higher than they were a year ago, and that points to a yield being far higher than it was a year ago. Well, obviously these crop conditions, they're not objective, they're subjective. So they're kind of up to the enumerators looking at a field, and some of it is smoke and mirrors, but there's also some value in it. And I think that's it's valuable. It's valuable in some regard. It's not certainly not factual. It's not we shouldn't be assuming that that number is just utterly amazing and this is the truth. But there's some value in it, and looking at where conditions were a year ago, presumably those enumerators have not changed much over where they were a year ago. That's why you would try to use that year ago number rather than looking at what it is like versus 20 years ago, or when they started in 86, because those people aren't doing enumerations anymore.
Right.
And there's always some bias based on the year before. So it's how do these crops look like they did versus a year ago? So we try to use that kind of comparison, just like the enumerators use.
Mm-hmm.
But that trend yield assumption, that the assumption that Arlen had to get to that 186.9 kind of drew me back to where they were at last year. So in November, StoneX does a customer survey and covers a pretty significant portion of the Corn Belt. StoneX is very large. They have a lot of clients, and they handle a lot of the bushels that come out of the Corn Belt. Well, their customer survey came out with a 183.7 in November. So with how fast harvest was last year, a lot of the harvest was done. That should have included a lot of the bushels that were being harvested. Well, USDA is far below that, 179. And, people think NAS, that number is just great. That's our number. That's what it is. And there's no deviation from it. Well, the RMA, about a month ago, they came out with their county yield data that's derived from all the crop insurance numbers. So every producer puts out those numbers into their crop insurance, and the RMA releases that. It's very delayed, but it's highly valuable data. So I was able to take that county data and basically go backwards into a national production number. And that national number ended up being 183.5. So that 183.5 versus StoneX's survey in November at 183.7, statistically, they're the same, way above USDA. So that brings some, it's like, was NASA a little low? It's like NASA's probably a little low.
Mm-hmm.
And we just saw them lower their feed and residual use for this crop year. And NAS loves to use that feed and residual number as a proxy to adjust the old crop production estimate without actually adjusting the production estimate. So it's another sign that says U.S. NASS was probably too low with last year's production estimate. So that makes one think, if NASS was too low in their production estimate last year, crop conditions are that much better than last year at this time, what could this year's corn crop look like? And that just gets me excited for Crop Tour out in the field,
Sure.
widespread across the Corn Belt. Let's see what this crop actually looks like. And like Hillary was talking about, we'll see how big of a pollination issue this tassel wrap has caused.
Well, yeah, and let's talk about that, because the crop obviously is not made yet. We're entering an extremely crucial period here. And as I'm looking at the weather forecast, Hillary mentioned it too. There's some significant heat coming in over the Midwest. An agronomist, Ken Ferry, always says you never want corn to have a bad day. We're starting to crop up some of those bad days, and now we've got about a week and a half of bad days lined up according to the weather forecasters. Some potential pollination problems, and now you're talking about tassel wrap. Dude, I don't know. This could be tough. This is going to be a telling time for especially the corn crop, isn't it?
It sure is. It sure is. Yeah, this is a key time, but with this heat comes a lot of precipitation across a lot of the Corn Belt, and that's going to help. But like Hillary mentioned, those overnight lows being high, it's going to provide some challenges. And I think prices are starting to reflect that a bit, but ultimately it's going to be just a waiting game to see where we really end up.
So speaking of where we really end up, I mean, I'm looking at a 186.9 here on my screen, a 183.7, and a 183.5. You're kind of laying out the case that, yes, on paper, these numbers do make sense, but life is not on paper, is it, Lane?
No, it's not. And the math just says it's possible.
Mm-hmm.
There's no certainties. And last year's weather was pretty unbelievable. And this year we're even more wet in the spring, and we've got pollination issues.
Do traders understand the distinction between real life and paper? Because there may be traders out there who've never seen a corn plant or really don't quite understand how all of this stuff works. They just, are working the markets and doing their thing. When they see a 186.9, maybe they figure, well, the crop is made, everything's going to be fine. What's the problem here? Or do they understand that maybe these numbers aren't quite a reflection of what we may wind up at?
No. Yeah, you're right. They don't realize it. I think the fund selling makes that very clear. Just persistent fund selling that we've seen throughout the key growing period, it's frankly a little dangerous. And one of Arlen's big thing when he put up that yield number, he's like, this is what traders are using. This is how they derive some of their production estimates, and this is what's driving trade and driving some of that fund selling. So until there's some real concrete evidence that points that it's wrong, those traders are just going to probably keep on selling.
Do we have to wait till we start seeing some yield monitor data come in at harvest time? Or do you think these will be adjusted along the way, and as we get closer to harvest, maybe the paper and the reality come together a little bit?
Yeah, it'll start coming together a little bit, and more data will be coming out over the next couple of months, and Crop Tour will be a big part of that too, just providing some additional data into what's really in the field. And people pay a lot of attention to that, and there's going to be a lot of other crop tours going on here in the next couple of months, and more reports of how this pollination, this tassel wrap issue is affecting the crop.
And part of me wants to say yes. Go ahead and talk up that crop. Let the traders think a 187 is in play, because when the reality does hit, I think there's going to be opportunity there, Lane. There could be, when the market realizes the reality of the yield and of the crop itself. Farmers need to be ready, don't they?
Mm-hmm. Yeah, so we've seen the market just being somewhat irrational over the past couple of months. The old crop stocks are tight. Demand has been very strong, and the market just continues to push lower. Well, the more kind of out of equilibrium it gets, the stronger reaction it's eventually going to elicit. So if the funds keep selling and the price keeps getting pushed lower, it's just going to elicit a stronger reaction on the back end, assuming that we're right. The stocks are as tight as they are, and the crop's not going to be as big as what some of these models are pointing to.
Lane, I think maybe we'll leave it there for now. Lots more to talk about here, but we really won't know until we've got some more time behind us. With your brain, I'm glad that we have you on our side, Lane. This is some terrific stuff. I really appreciate your perspective there. Hey, Lane just had a baby. Congratulations, buddy. Way to go. America needs farm kids now more than ever. So well done for your contribution, sir. We sure do appreciate you. For Hillary Mason and production support provided by Zach Zingula and, of course, Lane Acree, it's Davis Michelson for the Pro Farmer Podcast.
Thanks for joining us. We'll return next week with another episode of the Pro Farmer Podcast. And remember, everything talked about today is updated throughout the week on profarmer.com and in this Friday's Pro Farmer newsletter.